We also want to take a look at the stock performance this morning of shares of e.l.f. Beauty. Following a glowing quarter, sparkling quarter, if you will. There's so many ways to classify it, but they topped estimates on the top and bottom line. The cosmetics company growing net sales by 49%. That was primarily driven by strength in both its retailer and e-commerce channel. So really flossing the gloss here, not just with the net sales growth, but additionally with the market share gains. They gained about 150 basis points of market share, the company had talked about, and particularly this was one of their biggest net sales growth quarters in, I believe, the last 4 years. And so it does kind of beg the question of, all right, what were the comps that they were going up against? But again, at the same time, where some of those little luxuries might be being leaned into, especially within those wholesale partners that e.l.f. does have.
No, I think this solidifies probably a good quarter from Ulta when it reports here in a couple weeks. This is a very good quarter by e.l.f. or e.l.f. as I like to call it. And it comes despite them raising prices. Now, despite those price hikes, their products are still seen as very affordable. The product assortment is very broad, so they have been gaining share in this market. And it is interesting to see this. You take this report, a very value-focused cosmetics play. You saw McDonald's earnings earlier in the week blow everyone away, and you just get the sense that there is some trade down happening. I know the market's very excited about these potential this stop in rates, but a lot of consumers out there are really struggling and are looking for ways to save money. And I think you're seeing that through the prism of these e.l.f. results, and you saw them in the prism of McDonald's, and you probably see it, I would suspect, even the dollar stores when they report in a couple weeks.
I mean, maybe they're trading down in terms of brand, but it sounds like, from looking at some of the analyst commentary, that they're actually buying the upper end of the e.l.f. products. Now, is that still cheaper than a more premium brand? Probably. But if they're trading down in brand, they're still allowing themselves some latitude, I guess, within the brand here. So that seems to be helping matters.
It is cheaper. It is cheaper. A lot of these products, Julie, sell between $5 and $15.
Right.
I mean, you go to Ulta. I mean, you could drop $100, $200 a pop in here for some of their cosmetics. So e.l.f. is really seen as the price leader, and with a big presence in Walmart too, which of course is the value king.
Yeah, a lot of people adding a little bit more e.l.f. on the shelf, or at least the bathroom shelf during the quarter, and that directly trickling through to some of the gross margin. And this comes back to your point, Julie, of where within that product mix they may have been purchasing. The gross margin, that increased by about 255 basis points, 67%. But again, price increases, cost savings, product mix, and then the inventory adjustments, they said that kind of offset some of that gross margin growth.
One more pun.
One more?
Olivia Tong over at Raymond James called the results flawless.
Flawless. I wake up like this.
Yeah, exactly.
Flawless.